Welcome back to Trading Hour. Well, Rohit Seksaria from Sundaram Mutual Fund now joins in to discuss market fundamentals as well as his top sectoral picks. Thank you so much, Rohit, for joining us. First up, analyze for us, how exactly you've read all of the developments over the last 48 hours, the impact of the tariffs, and what is it that you like or dislike at the current juncture?
Thanks. See, short term, this tariffs and the narrative of the tariffs will keep the markets volatile. And it's very difficult to say how the entire tariff situation plays out because it's all dependent on what one individual wants to do. So I guess for the next 2-3 months, we'll have to wait it out and see how the tariff and its impact plays out in the short term. However, if we look beyond the tariffs, the domestic macroeconomic environment is improving. The sharp correction in the crude prices is going to help the domestic economy. Even it's going to help the government revenues. Like yesterday we saw government increased excise duties, which would shore up the government revenues, whatever shortfall they may have from income taxes. RBI, on the other hand, is ensuring there is sufficient liquidity in the system. From liquidity deficit environment, we have moved to liquidity surplus. That will ensure that the rate cuts which RBI does gets passed on. So we are looking at an environment, monetary environment, which is more conducive. And with crude price correction, you will have margin tailwinds. In such an environment, I guess once the tariff headwinds, we are clear over that, markets should rebound in that kind of environment.
The problem is no one knows how this tariff, certainty, how prolonged it's going to be. In the meanwhile, markets are going up, down, anywhere, and narratives are changing by the day. But Rohit, be that as it may, because it's outside our control. Are you putting money to work at current levels in the Indian markets?
See, as a house, we are always fully invested. We don't take cash calls. So we remain fully invested. And the way we are trying to navigate this is by focusing more on domestic part of the economy rather than looking at the export-oriented names. So that's how we are navigating this short-term tariff-related volatility.
Understood. Rohit, we are now heading into Q4 earnings season. In fact, a couple of numbers will start trickling in today, tomorrow. IT starts off. So going into Q4, what are your expectations? Where do you think we will end FY25 at? And any initial estimates that you have for FY26?
See, Q4, our expectations are in line with consensus expectations. Mostly flattish kind of an earnings growth is what we are looking at for Q4. As I told that the improvement which we have seen recently, both from the crude and from the RBI side, will take time to flow through to the economy. So somewhere towards the later half of F26, I believe we'll start seeing improvement. So overall, F26 should show a good double-digit kind of a earnings growth, would be my early guess right now.
What are the sectors that you like and what is it premised on?
See, as I told you, we are right now more focusing on domestic sectors. And one sector which I like the most right now is the banking and NBFC space. That's one sector where valuations have been very reasonable. And with RBI providing support, not only from surplus liquidity, but from on the regulatory side, they are more supportive of growth now. So in such an environment, we believe the banking and NBFC space should do well. In the environment where RBI is cutting rates, your NBFCs tend to outperform as their interest margins expand. So that's where we are playing at. One concern this sector had about was retail asset quality, but that also we believe was too much was made out of it. It's well under control. So this remains the best sector according to me. Another sector which we look at is the consumer discretionary sector, the specific pockets of consumer discretionary sector like luggage, durables, restaurant, hotels. These are the pockets where we are looking to play.
Understood that. Rohit, you said you have a very positive stance when it comes to the BFSI space. You also enumerated the reasons why you like that space. Now, within the BFSI pack, where does your preference lie? Is it the large banks, the PSU banks, private banks, or is it the NBFCs, or would you look at some of the MFIs that have been beaten down quite a bit?
See, right now, what I like most is the NBFCs and the MFI space. NBFCs, as I told, is a play on the interest rate cycle. As rate cuts flow through, their net interest margin should expand, and that should lead to a better earnings on the NBFC space. MFI space is very interesting. The valuations have corrected sharply because of the asset quality stretch which they endured for the last year. But the recent updates are quite encouraging. In most of the states, the asset quality has started improving. And in such an environment, I see a very good risk reward even in the MFI space.
Understood that. So BFSI, we have your views. Now, two sectors, that have been impacted the most, especially from the tariff tantrums. First is the IT pack, worries of recession, that is something that has led to significant selling. So IT, given the fact that FY26 Q4 expected to be quite muted, would you turn positive from here on? And what is your view on the pharma space? Do you like any names there? Would you be positive on that front?
Right now, I'm maintaining more of a neutralist stance as the recession fears are more or less getting priced in. But now the growth, I don't see short-term growth surprises coming from that sector. So that's why I maintain more of a neutralist stance on the IT side. On the pharma side, it's a little more cloudy according to me. A big part of pharma earnings over the last couple of years came from one particular drug, Revlimid, and that's going to expire next year. So we need to see how that plays out is one part. And secondly, the entire tariff narrative, how it flows for the pharma, we don't know right now. So pharma, right now, I'm avoiding till the time the situation gets clearer.
Understood that. So IT, a neutral stance, pharma at this point of time is an avoid for you. Well, let's talk about, some of the domestic facing industries as well. Auto is one particular space, there's been significant volatility, worries about, impending entry of larger players from the US market, BYD entering, or maybe not entering, as is the clarification that has come today. So do you like autos at current levels? And within autos, where does your preference lie? Is it the passenger vehicles, the CVs, or the two-wheelers?
Yeah, I am positive on autos, and within autos, what I like most is the auto ancillary pack. It's the specific pockets of auto ancillary, because auto ancillary becomes quite wide. There are specific pockets of auto ancillary which are doing very well. They are gaining share, market share, and wallet share from the clients, and they are expanding well. So that's one pack we like. And within the four-wheelers, two-wheelers, I believe right now, I believe four-wheelers gives us a better risk reward. One from the income tax cut this year, we are expecting some sort of a demand improvement, and some of it should flow in the auto pack, and more of it going into the next year when the pay commission revision comes in. That's when we believe the four-wheeler pack should start doing much better.
Okay, got that. Just wanted to get your thoughts in on the EMS companies, because there was this Apple news that how they're planning to send more phones to the US from India to offset the high cost of China tariffs. If this happens and it gets more broad-based, do you think it could be a big boost for EMS companies? The only issue is that while the opportunity is there, valuations have also been always, on the higher side for the last few years.
Yeah, see, that's again coming back to the tariffs or differential tariffs between India and China. Right now, it's very difficult to take a call on how it finally ends up. I don't think any company right now will be making changes to the supply chain based on the initial numbers which has come out. All the companies will be waiting for how it finally plays out, what's the final stable numbers, and based on that, they will be taking a call on how to reorient the supply chains. If the current numbers stay, then there may be some marginal benefit to Indian EMS companies. But as you rightly said, valuations are more or less pricing much of it. So right now, I am not that positive on the EMS names.
To that, thank you so much, Rohit, for joining us and giving us a view across a whole breadth of sectors, especially in this volatile time. But we'll move on. We'll take a quick break. We'll get you more on the markets on the other side.